Hi, our next set of video will be based on filing of returns. This is Shruthi Meenakshi. So, what is return of income first? It is nothing but a format in which different type of assessee will furnish the information as to their total income and tax payable. This is prescribed as per Income Tax Act 1961. Though there are various types of returns sections which govern the filing of return. The major ones which we'll be discussing are these five. So first, taking into consideration 139(1), which is compulsory filing of returns. First, there are two categories of assessees which needs to file their income on or before the due date to avoid penalties and other consequences, even if they have an income or loss. For example, companies and firm has to file their return of income irrespective of the loss during the year. Next category would be other than company or a firm. So an individual in general will be filing his return of income only when his total income, or in case of HUF, AOP and BOI, the total income of such other person in respect of which he is assessable under this act during the previous year exceeds the basic exemption limit. For example, for the current year, say for a person, that is assessment year 2021, only if an individual's total income, that is income before considering into the chapter 6A deductions, and in case of long-term capital gain or short-term capital gain, section 54 deductions, the income should not exceed rupees 2,50,000. Third point of consideration would be every person being a resident other than not ordinarily resident. Therefore, a person who is RNOR, that is resident not ordinarily resident, should also file the return of income with on or before the due date if any time during the year they are a beneficial owner of any asset located outside India, or if they are authority in any account located outside India, or is a beneficiary of an asset, that is including any financial interest located outside India. However, an individual being a beneficiary of any asset located outside India would not be required to file income under this clause, where income, if any, is includable in the income of the person. Refer to any person who is a beneficial owner. That is first category, who is a beneficial owner or otherwise of any asset. So now there are three categories who are required to file under 139(1). So first would be companies and firm, irrespective of their total income, has to file. Second category would be any other person than individual and other than companies and firm, they are required to file if their total income exceeds 2,50,000 or basic exemption limit. Third category would be a person who is resident, not ordinarily resident, who is a beneficial owner of any asset, including any financial interest in any entity located outside India. So now, as told before, the consideration of basic exemption limit should be before taking into consideration chapter 6A deduction or section 54 deduction in case of capital gains. Third category of person, third point of consideration is who is not required to, any person other than a company who is not required to file a return on or before due date should file if they fulfill any of the following conditions. One is that they have deposited an amount or aggregate of amounts exceeding 1 crore in one or more current accounts, has incurred expenditure of an amount or aggregate of amounts exceeding 2 lakh, or any other person for a travel to a foreign country, or has incurred expenditure or an amount of aggregate of the amount exceeding 1 lakh towards consumption of electricity or fulfills any other condition. So the following categories should be considered while taking into account the person who is compulsorily required to file return of income. Second category of filing of return is 139(3), which is return of loss. While filing return of loss, a loss return, certain things are to be kept in mind. That is, to income which won't come under the category mandatorily within the time for carry forward of loss is loss from house property and loss from unobserved depreciation in case of business. So for an assessee to carry forward any type of the following type of losses, he has to mandatorily file a return of loss under section 139(3). That is, if a person has business loss, speculation business loss, loss from specified business, or loss under the head capital gains, or loss from owning an activity of maintaining the race horses. So the two types of exemptions provided for 139(3) section is that loss from house property and unobserved depreciation. So for these two types of losses, even if the assessee has not filed the return of income within the due date as prescribed by the Act under section 139(3), then even then the same can be carried forward to the future years. Next category would be 139(4) for belated returns. When a person has not furnished his return of income within the time allowed to him under 139(1), then he may furnish return for any previous year at any time stipulated under the Act, which is earlier of these two. One, end of relevant assessment year. So for example, if the assessment year under the question is say assessment year 2021, which is financial year 1920. So 1/4/2019 to 31/3/2020. Then return of income should be filed before 31/3/21 or before the completion of assessment. The next category would be revised return under section 139(5). So when is a return allowed to be revised? There are two situations where a return filed by the assessee can be revised. One is when he has filed under 139(1), which is compulsory filing of return, and the two, which is 139(3), return of loss. When already a return has been filed belatedly, then the assessee cannot revise his return, and the time limit for filing revised return shall remain the same as belated return. That is, before the end of the relevant assessment year or completion of assessment, whichever is earlier. Next is 139(9), which is defective return, where the assessing officer considers that the return of income furnished by the assessee is defective. He may intimate the defect to the assessee and give him opportunity to rectify the defect within a period of 45 days from the date of such intimation. However, the assessing officer has the discretion to extend the time beyond 15 days on an application made by the assessee. So if the defect is rectified within 15 days or such other extended period, then the return would be treated as an valid return. Say if it is not rectified, then the same will be considered as an invalid return. For example, one such case where the assessee might be receiving a defective return notice is that in the return of income, the assessee has selected that he is liable to tax audit under the respective section. However, a report under section 3CA or 3CB and annexure 3CD has not been submitted by the auditor and has not been approved by the assessee, then the same will be considered as a defect in return, which has to be rectified. Now, if the report annexure is filed and the same is said to be the defect is said to be rectified, and now the return which was filed in the original date will be considered as a valid return. So now that we know when a return is to be filed, what are the interest and fees which are required to be paid by the assessee in case of default in filing of return? One, section 234A, which is interest. So revising the previous portion, which is for advance tax, 234B and C is for default in payment of installments in advance tax. So 234A is for non-filing of returns or delay in filing of returns. So one, it is same as the other, which is 1% per month or part of month commencing from. So there are two scenarios under this. One is when return is filed, the other when return is not filed. So the starting date for both shall be date immediately following the due date. Say for individuals, 31st July is the due date. So the calculations shall start from 1st of August till the date when the assessee actually files the return of income. Second category would be when return is not filed. So the starting date remains the same as 1st August, that is a date after the due date, which is 31st July, but end would be the date of completion of assessment. This is interest, and the second would be 234F, which is fee. The same is charged as follows. First would be if the return of income is filed on or before 31st December of the assessment year. Say in case of assessment year 2021, last day for the assessee to be charged with 234F of rupees 5,000 would be 31st December of 2020. If it exceeds further than 31st December 2020, then he would be charged with a fee of 10,000. An exception to this general rule is that if assessee has a total income of less than 5 lakhs, then 234F would remain 1,000 whenever the return has been filed by the assessee. Taking an example, when the return due date is 31 July 2020, actual date of filing of returns 28 September. Due date calculation of 234A will start from 1st of August. So taking August into consideration, because 1% per month or part of the month. August 1% and September month or part of month again 1%. So 2% on the total self-assessment tax payable. After taking into consideration all the credits, that is TDS, TCS, advance tax payments if any, and MAT credits available, and any relief available for the assessee. On the balance amount as such, whatever is pending as self-assessment tax payable, on that amount interest should be charged. And fee of, in this case, without income, without his total income, it is tough to consider what is the amount. However, let's assume that he has an amount about 5 lakhs, the total income above 5 lakhs. Then in that case, 234F of rupees 5,000 will be charged. One important point to be noted is that no interest under section 234A shall be charged on self-assessment tax payable by the assessee if the amount of tax pending after all the credits available is paid before due date of filing of return. So say as on filing date in the mentioned scenario, that is as on 28th September, there is no tax due. That is, the self-assessment tax was computed and paid well before the due date, that is before 31st July. Then no interest shall be charged on 234A. However, fees under section 234F should be remitted by the assessee.